Welcome to episode 5 of the weekly watch list, where we're going to run through some stocks just like we always do, try and give you some best buys for the week and just some things that we've been thinking about for our own portfolio, as well as can help you out with yours. So, one stock that we've already talked about, we're going to bring it back today, is Apple. Of course, we all know Apple. We all know they're a powerhouse, but we're going to give you the reasons why we think it's a good buy this week. So, starting off, I think it's an opportune time for us to buy this stock because it's dipping from all the pre-split highs from earlier this month. So the stock split, it was whenever a stock splits, it's a lot of times everyone likes to buy. Everyone just is kind of running in like, oh, what's going to happen? What's going to happen? Stock price goes up, and after a few weeks, as we're seeing right now with Apple, it's starting to dip back down and kind of get a steal here. I mean, it's Apple, so you're not really worried about it. It's obviously going to go back up, so you're not worried about the dip. It's just a good time for us to buy, get in a little bit lower, make a little bit of extra money on the top. So it's, for me, my personal opinion, it's a good starter stock. It's something you don't really have to worry about. It's like a good building block for your portfolio if you're just starting out. Something that you can have in there that you don't have to worry about. You don't have to keep track of every single day, because you know in a few weeks you're going to make your money back. And Vasily's going to give you a few reasons on why he believes that money is going to be a little bit of an exponential growth, if you would say.
Yeah, guys, and it's very important to know, like you just said, with building blocks in your portfolio, you don't want to spread your money too thin. So honestly, with us bringing Apple back this week, it's just kind of a reminder to let you guys know, like, hey, like we're trying to work on this with our own portfolios right now. We want to get huge established positions to make sure those heavyweights can really bring down the volatility of our portfolios. So as we know, Apple's not going to be one to tank a whole lot every now and then they might have a slight pullback, but they're not going to tank, right? So we want to get big built out positions in this one over time. And the reason being is because in my own portfolio, I kind of treat this one as like a savings account. You can just throw your money in, not really worry about it. It's not going anywhere. You're earning a teeny bit back off of it in the form of dividends, but it's going to go up ultimately over time. So you can just keep chucking money in it and not really worry about it, in my opinion. Okay, the reason we think that now is the time to buy, right? And if I show you the current price, 105, we're seeing that it's slowly starting to come back down. As we know, big tech has been inflated, and it has been. We're coming off like a 5-month bull run here, so big tech has been completely overvalued, and I would not have suggested buying at the peaks when everybody was looking at the split. But as we see it come back down and the market kind of gets a kind of correction here, as we like to see, if it dips back into what I would like to call the immediate buy zone for me, which would be $90 to $95, that would equal about $360 to $380 pre-split, which I think is a value, guys. It is a complete value buy at that point, including what it's about to do after these new iPhones drop, guys. Everybody's going to want the new 5G iPhone 12. I'm getting a 5G iPhone 12. I know tons of other people getting it. It's about to make the stock shoot up. If it hits 95, don't even think about it, in my opinion. Just chuck your money in it as much as you got. Invest in dollars, fractional shares. So that pretty much covers that. Pretty short and sweet first pick here. We just want to bring it back. You know what I mean? It's the basic stock, but sometimes basic just works, guys, and that's where we're going with this one.
Absolutely. And for the next stock, we're going to do something a little bit different that we haven't done on weekly watch list.
All right, guys, and our second stock here is not really a stock. It's kind of a sector, and we're talking about airlines here. And you might be thinking why we're talking about airlines, right? Because this doesn't seem to be that stable right now. But we think that this could be a great rebound play to take advantage of right now, because most of the airlines are heavily beaten down, guys. And the three we're going to be looking at in particular are Delta, Southwest, and United as rebound plays here. The reason we find these a little bit more compelling is because the price seems to be right, and we think that they have the potential to survive throughout the rest of the year as travel starts to get opened back up and things get working back to normal here, guys. So we don't think of American and Spirit Airlines as of compelling of plays as the other three that I just mentioned, and I'll kind of let Tyson get into why we think that.
So looking at the airlines in general, they've been hurting, obviously. And with things kind of beginning to open back up and like the way everything's moving around, it's still not a bad time to buy now because they're still so low and there's so much room for it to grow. So we're looking at growth stocks, obviously. In my opinion, Delta, Southwest, and United, they're a little bit safer. It's more of a long-term play, obviously. They've been around for so long. You don't have to worry about them just tanking and just dissipating. And they're just gone. You're losing all your money. That's not really something that's going to happen because it's not like airlines are going to go away. They're just waiting on the time to rebound, like Vasily said. And when you're looking at American Airlines and Spirit, it's more volatile. They're a little bit newer. They don't have as much of a backbone as those other three that we mentioned. So really, this week when we're talking about airlines, it's kind of up to you. We do our own research whenever we're looking up a stock. We don't just go blindly into putting our money in random places. And because there's so many different airlines, and we're just looking at U.S. stuff here, obviously, but it's kind of what you feel more comfortable with. So if you're not worried about a volatile play, American Spirit could be for you. American has that dividend, while Spirit doesn't. But if you're keeping up with the world news and how everything's playing out over the next few months, and you pick which one you feel more comfortable with, you can make a little bit of money off of it. And with those volatile ones, you can make the money a lot quicker. With the other three, like I said, they've been around longer. It's a little bit safer. Again, you're still going to have to look through the news. You're going to be paying attention for when they're going to be opening things back up, when they announce that they're building planes again, or when they're getting contracts and different things like that. And it's all going to be give and take on what information you can receive. Aside from that, what we're looking at is between all five, on average, the stock price is sitting at about 50% below what it was sitting before the pandemic.
It's a good turnaround.
Exactly. So there's definitely room to grow for all of them because they're all sitting in that same range, obviously because they're all in the same sector, so it's going to be pretty similar. The only problem with that is if you do invest money here, don't expect to move it for a little while. You're looking at least 6 months, probably longer.
Probably a year to two. Yes.
Yeah, well, for full growth, yes, absolutely. But if you're looking to just make some money off the volatile ones, it's going to be like the news that I've been reading through for the past 2 days. It's some people are saying, oh, after the election, we're going to see travel start to pick back up, blah, 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 blah. After the winter, whenever everything starts to calm down and our immune systems can handle you can use the hot weather to help handle everything that's happening. So like I said, you might have a little bit of time here. If you want to take a week or two to do some research, you probably have that time, and you're probably still going to be able to get in at a good price.
Yeah.
Again, I would look at those dividend plays like Delta and Southwest because they're going to make you a little bit of extra money while the stock price is still low. I mean, that's something, right? It's not anything crazy, but it's a little bit extra in your pocket.
Yeah. Watch out for cuts on those guys. Some of the weaker airlines, American Spirit, cough, cough, you know what I mean? They might announce cuts. They might, you know what I mean, make sure you're checking what you're investing in.
Yeah,
but
absolutely.
We think some of the more stable ones, even with slowdown in travel, might still be able to support you with a little bit of a dividend, but just want to throw that in there.
No, of course. And we don't like to just talk about stuff and not invest. So like me personally, when I started with my portfolio, I was looking through a lot of things. I didn't really know a whole lot, and everything was down because of what has been happening in the world. So it was not too long ago, obviously, but I had invested in Azul Airlines. So like that's my current airline play that I've been looking at. Luckily, I got in lower than what it's at right now, so I could still make some money if I decide to get out if things just do go bad. But they're a younger company. They've been around 12 years. They're a Brazilian company. They're huge there, but of course, they're not traveling nearly as much as they could be. Contracts have been kind of set to a halt, but that's like kind of my volatile play, similar to American and Spirit. So if you guys are investing in these airlines, I want you to know that I'm right there with you. And when those stock prices drop a little bit, I'm watching and I'm feeling the same thing you guys are if you guys are investing. So I don't want you guys to feel alone, feel like you're out here just searching through random data and not understanding what it is or not knowing what's going to happen next, because realistically no one knows exactly what's going to happen next. But we got a pretty good idea that once all this stuff starts to clear up, all these airlines are gonna come back, and they're gonna come back stronger. They're gonna start growing again, and that's kind of it with airlines. Just do your research yourself. Make sure you're comfortable with the play. That's the only thing I can say. There's so many options to make sure you're comfortable.
And notice, guys, like you said, his was a Brazilian airline. He knows what he's getting into. So, like, for him, he was thinking in his mind, Brazil, a lot of tourism, a lot of this, a lot of that, a lot of travel. So he knows why he's in the play. If you're going to get into something, make sure you know with what intent you're getting into so you feel more comfortable when that volatility hits. You know what I mean? So I think that was important to note as well. But if there's nothing else you want to add, we basically only had 2 picks for you guys this week. We want to keep it authentic. If we only see 2 possible plays in a week, that's what we're going to give you. If we see none, we're going to tell you to hold, and we're going to talk about why it's a hold that week. You know what I mean? So I think that helps the authenticity of the channel. If there's nothing really compelling, why would we share it, So that to give you our honest thoughts. But as always, we're not financial advisors, so this is entertainment purposes only, guys. Do your own due diligence as always. And with that being said, we'll see you guys next time.